Okay, welcome to the Chapter 12, Section 1 presentation lecture. Chapter 12 will be broken up into 3 different presentation lectures, one for each section. This one will only include the content from Section 1. So Chapter 12 is payroll accounting and beginning the accounting process for paying our employees. The biggest number, or the biggest, and this, let me rephrase this. All of this is going to revolve around what is known as gross earnings. Gross earnings is the amount of money that is paid to an employee for work that is done after or before any taxes are taken out or any other deductions. So the gross earnings is what you earn. The net pay or net earnings is what you actually get to take home and keep. Now, when it comes to the importance of payroll records from an accounting standpoint, we do have to pay our employees, and that is an expense. And so payroll is a list of all of the employees and the payments due to each employee for a specific pay period. Could be 1 week, could be 2 weeks, could be a month. Pay periods, as mentioned just before, being a week, 2 weeks, or month, they are different for every organization. They're going to do things a little bit differently, so depending upon the organization, they determine what the pay period is. The payroll system is a 2-step system. Step number 1 is collecting and processing all of the information needed to prepare and issue payroll checks to the employees per pay period for their working hours. Then, payroll records need to be generated, and these are needed for accounting purposes and for reporting to the government, managers, as well as others. Now, the importance of payroll records. A payroll clerk is a very important person. Payroll clerk is going to be the person who's going to be taking care of a majority of this. So the payroll clerk is going to make sure employees are paid on time, make sure that each employee is paid the correct amount, completes payroll records, submits payroll reports, and also pays payroll taxes. That's the payroll clerk. All right. In one of the previous slides, we saw gross pay. So if we are going to compute gross pay, that is all earnings before any deductions have been taken out. So total amount of money an employee earns in a pay period. This can be based in a couple of different ways. It could be based off of a salary. Salary means that you are paid X amount of dollars no matter how many hours you work. It can be based on hourly wage, which means an employee gets paid X amount of dollars per hour worked. It could be based off of commission, which is a sum of money that is granted to an employee for, say, number of sales. It could be salary plus commission, in which case a base salary plus the commission generated from sales is added onto it. And then also overtime pay, which normally usually only applies to hourly wage employees. Overtime pay, in most cases, is going to be time and a half, which is hourly wage plus half of your hourly wage salary. Now, computing gross pay is taking the salary, which is a fixed amount of money paid to an employee for each pay period. Now, no matter how many hours this employee works, your paycheck is going to be the same. So a salary employee is going to be paid the same if he or she works 30 hours or if he or she works 50 hours. Pay remains the same. So computing gross pay, if we were going to do it in an hourly wage format, then we have our employees who are filling out time cards or logging their work hours in some type of an automated time system. And regardless of whether or not it's automated or if it's paper and pen or paper and pencil, a record of the times an employee arrives and leaves each workday is recorded on the time card, whether or not it's an electronic system or a paper pencil or a card and punch card system. Some organizations will have what's called electronic badge readers, in which case you might come in with your ID badge and swipe it like a credit card through a magnetic strip, which is then going to record your arrival and departure times. Any way you slice it, you're being recorded for the amount of time that you work, the time that you punch in and the time that you punch out. So if we were going to compute this gross pay, what you need to know is that when an employee starts or finishes, when that clock is punched, whether or not it's electronically or manually, could mean the difference between an hour of pay. So for example, many companies are going to divide hours into 4 15-minute quarters when measuring work time. So a quarter hour, let's say on the hour, 2 p.m. 2 p.m. is the start time, perfect. If you show up 15 minutes after the hour, 2:15, then you are a quarter of an hour late. If you are 30 minutes, then you are half an hour late, 45 minutes, 3/4 of an hour late, if you were to punch in at those times. Now, the actual time recorded, you want to be there early so you make sure you get paid for all of the amount of time that you're going to be working. So if you start at 8 o'clock, you want to be there probably by 7:58 or earlier. If you show up at 12:25 and you punch in, your working hour won't start until 12:30. If you show up at 1:32, there's not many employers who are going to take it back to 1:30 of your start time. They might say, okay, you're here at 1:32. That means you actually don't start work until 1:45, and you don't get credit for that 1/4 hour. But in some cases, you might find an employer who is gracious enough that if you are within a grace period to give you a couple of minutes if you do punch in a couple of minutes late. So if we compute gross pay, we take it a little bit further. Now we take into consideration a commission. A commission is the amount paid to an employee based on a percentage of an employee's sales. So Joyce is paid a 5% commission on all of her sales. So last week, she generated $8,524 in sales. Her gross earnings for the week then is going to be $412.70. And the calculation to get that is $8,254, which is her salary, which is the sales that she generated last week times her commission percentage of 5%. Now, if you are an employee who earns a salary plus commission or bonus, that means that you might receive a base salary and then plus a commission. In this case, Juan is paid a salary of $200 per week plus a commission of 3% of his sales that he generates. So his sales were $4,810 last week. His gross earnings then are going to be $344.30, which is calculated by taking his base salary of $200 plus the calculation of the sales times the percentage of the commission. If you are an hourly employee who works overtime hours, overtime rate is normally, in most cases, 1.5 times the employee's regular hourly rate. So in this example here, we have an employee who worked 40 hours at regular rate pay, $6.60 an hour, totaling $264 of gross earnings. In addition to that, there were 3 hours of overtime pay. Overtime pay is 1.5 times your regular rate. So this time it calculates out to be $9.90 an hour. 3 hours worked at that rate for an additional $29.70. Total gross pay for this period is $293.70. If you are a salary employee, hopefully you have the opportunity to get overtime hours and overtime rates, but most often you do not. Let's say in this example that the hourly overtime rate is calculated for Jim in this way. His salary is $600 per week. His hourly rate is $15 an hour, assuming a standard 40-hour work week, which is taking $600 and dividing it by 40. His hourly overtime rate is going to be then $22.50, which is $15 times 1.5. Jim's gross earnings for a 44-hour work week are $690 and are calculated by the following calculation. Regular rate is $600. Overtime hours is 4 at the calculated overtime rate at $22.50, which means there's an additional $90 in overtime pay that'll be added to his paycheck. So regular rate plus overtime rate is going to equal $690 of gross pay. Now, taking a look at these are examples of the demonstration problems. You can take a look at these and begin calculating them. We will be going over them in class. So here is one for calculating gross earnings. 12.2 is calculating out commission. 12.3 is calculating overtime. And if you go back and look and revisit some of the slides for section 1, you should have no problem being able to calculate out the earnings for these 3 problems. So attempt these problems, and then we will go over the results and move on to section 2. But in this case, just make sure that you have everything done for section 12.1, and I will see you next time we meet in class.